Hello, and welcome to Virtual Investor Conferences. My name is Matt Lateplo, and on behalf of OTC Markets, we're very pleased you have joined us for our next live presentation from BitMine Immersion Technologies, Inc. Please note, you can submit questions in the box to the left of the slides. You can also view a company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I'm very pleased to welcome Jonathan Bates, CEO and Chairman of BitMine Immersion Technologies, Inc., which trades on the OTCQX Best Market under the symbol BMNR. Welcome, Jonathan.
Thank you. Thank you very much. Thanks for having me. And thank you, everyone, for joining and listening into the presentation. Apologize, the sun's coming up right in my face, so if you notice the lights, and it's pretty early here, so I have coffee. But looking forward to explaining to everyone what we do, who we are, how we got here. So BitMine Immersion Technologies is a Bitcoin mining company. We specialize in a really kind of cutting edge form of mining. We mine in a specialized fluid. We submerge the computers in a specialized fluid, and I'll talk about that. We trade OTC markets, symbol BMNR, and I guess I'll get us started here. So what is Bitcoin mining? A lot of you on the presentation might know what Bitcoin mining is. Some of you might not. But it's a process of contributing your computing power to stabilize the Bitcoin network by validating transactions with powerful and specialized computers. So these computers are expensive, and frankly, they're highly powerful. The current generation runs about 100 terahashes a second. That's 100 trillion hashes per second. The next generation coming on is about 200 trillion hashes per second. These computers are rewarded with Bitcoin for securing the network. So you can picture hundreds of thousands of computer servers running at the same time, all validating transactions with the hope that they'll obtain a block reward. That's called proof of work. That's what Bitcoin mining is, and that's why miners participate. And it's a very decentralized way for any network to be stabilized. That's unlike any centralized server you might think of, like any U.S. government, Bank of America, any other major centralized server is completely different than that. The one thing that makes it easier for miners, so it's not a roll of the dice, is most miners participate in mining pools. What does that mean? They aggregate computing power to ensure a consistent and pro rata share of the daily network payout. There's about 5 or so mining pools, or maybe 10, that control 80 or 90% of the Bitcoin mining. So if you're a member of the pool, you get your pro rata share of that pool's block rewards in the day. Every 10 minutes, a block is awarded. So if you're a part of that pool, someone in your pool gets the block reward. It's redistributed out to everyone else. That's how that works. Next. So what is BitMine? What's our difference? Our difference is really more on the technology side rather than raw computing power. And a lot of the larger NASDAQ miners are, it's a race to get as many computers on as possible. What we focus on is trying to get the best quality computers and the best quality data centers online. We think this is really going to be the future of what Bitcoin mining is, and possibly even computing in general, because you want to obtain the most efficiency you can out of any computer. This was around before Immersion was around before Bitcoin mining really took off. So it's been a thing for a little while, but we have folks on our team that have been immersion mining since it became a thing for Bitcoin mining, 2017-18. So the efficiency, miner throughput, and also the miners themselves, the computers last about 30% longer in immersion because they're protected from all the elements. All right. So kind of went over this a little bit, but it really just comes down to, you can see a little graphic there of the machines running underneath the fluid, but it's about heat dissipation. And so the heat is really what you're trying to get rid of. You get rid of the heat, and then it becomes a quicker cooling process. It allows you to get more overclocking out of the machines. It allows you to get more, obtain more Bitcoin out of the same machine because you dissipate the heat more efficiently. So that's kind of the secret sauce. You get more Bitcoin out of the same computer because you're rejecting the heat so efficiently. And of course, again, it preserves the life of the machines. So where are our locations? We've got a location in Pecos, Texas right now. It's 5.5 megawatts, of which BitMine's ownership is approximately 2.5 megawatts of that. And then that's inclusive of our about 30% ownership of a joint venture project. And one of those containers you see is ours as well, solely ours. This can be expanded up to 10 megawatts. So, that's a good, kind of a good graphic because you can see the transformers. Those are, 1.5 megawatt transformers. General Electric, we have a whole bunch of those actually. But those pair with each container. The inside of the container is shown there. There's computers inside of each of those aluminum marine welded bins there. It's about actually 24 per group. And then on top is the dry coolers where the heat is rejected and then the fluids sent up and sent back down. But we have this Pecos, Texas site, which, if you look at we talk a little bit about it. I issued a shareholder letter today. I'd encourage you to look at our press release today and take a look at that. We talk a little bit about the amount of Bitcoin we expect from that, and the expansion potential there. We also have assets in Trinidad and Tobago. We have a 1.6 megawatt site which just launched. And so that we also have two other sites in Trinidad where we have miners that are hashing as well. But this site is kind of our flagship initial site with a data center partner down there. Our cost of electricity is 3.5 cents. So we have the ability to expand it to up to 100 megawatts if we had expansion capital. But this is a really good start for us. We're excited about the possibilities there. And then lastly, in Kentucky, we just deployed 3.4 megawatts. So that's a little over 1,000 machines that we just deployed in Kentucky as of November 1st. We're with a data center hosting partner there. We're tracking at 5 to 6 Bitcoin a month right now at that site. And so that's the Kentucky site. That's kind of our biggest site now. A deal was proposed to us, and we were very decisive. It was kind of an oversubscribed situation, and we were able to put together some pretty creative financing using hash rate derivatives. And I can talk about that if anyone wants to be really bored with geeky math stuff. It's trading desk kind of level things. It takes me back to my JP Morgan days, but we pulled it off quickly and kind of sophisticated. So that's what that is. But 5 to 6 Bitcoin a month kind of puts us on the map, we think. In addition to our other stuff, which is currently running and expandable. BitMine revenue streams. What are different revenue streams of a company like ours? Self-mining is the obvious one. You put computers in, the company owns, you mine Bitcoin. It produces Bitcoin, and it's the highest reward potential because during times of high profit margin, you keep the whole profit margin. As a data center owner, hosting revenue would be the next set of revenue you could obtain, and the hosting revenue is you would essentially, if your cost of electricity is 4 cents, you charge the equivalent of 6 or 7 cents. So not quite as sexy, but certainly stable and secure. And it doesn't require us necessarily just to host Bitcoin. We're talking to one company about hosting some GPUs that they'll be leasing out for AI compute. So, but it's the plugs are similar, and the modifications would work. And so anyway, that's something we would be able to do. We don't have very much hosting right now. We're mostly all self-mining at the moment. And thirdly is machine resales. We've done a little bit of that, but we have a lot of good partners where we can get machines at great prices. So we're trying to be a little more relevant in the machine resale space, because we feel like we know these markets pretty well, and we feel like we can connect sellers to buyers. And so we're going to try and do more of that in the coming year. All right. So public market landscape. So just the reality of large, especially public miners. And I did this analysis. It was in July is when I first did this. I've had a couple of iterations of this this presentation, but in July, the average top five market cap was about 1.86 billion. The average revenue was a little over 100 million. This was trailing 12, and that was based on the previous reported 10K of any of all the companies. I didn't look at Yahoo Finance or anything. I actually pulled up the 10Ks. And the average loss, albeit it was a bad year, trailing in 22, 330 million. Revenue multiple at that time was about 17 times. Imagine that's gone down a little bit because people's revenues most likely gone up, and their prices, I'm not sure if they've kept up or not, but more or less you get the idea. To me, because most companies are losing money, it's a multiplier of revenue comparison. So that gets us to us. Where do we stand? We're really small, and so our market cap, I don't know, around 30 million or so. Just based on the Bitcoin we're mining now and our ability to sell a very small amount of machines and not expanding much of anything, we're tracking at 4 million or 5 million or something along those lines. So that's okay. I think we have a chance to do a lot more, especially if Bitcoin price goes up at all. And we're all in this. All Bitcoin miners are in this for that reason. But the projected revenue is it makes us kind of a discount to the peers, where we're trading at a lower multiple relative to them for where we stand, but also where we could stand, because when you're a little company like this, you can grow revenue a lot quicker. It's a lot easier to go from 5 million to 10 million than to go from 75 million to 175 million. That's really, really tough, especially with the number of miners you have to deploy and the number of people and the number of operational tasks involved with it. It's huge. So we think we can move the needle a lot quicker because of our current size. We don't have a lot of debt. I run a hedge fund, a technology hedge fund called Innovative Digital Investors, IDI. The only debt is to the fund. So it can be, we've already refinanced it and done a number of things. The most recent round of funding was done at $1.25. We raised about $5 million in 2022. And it was at there were shares at $1.25, and then a warrant at $2 and a warrant at $4. There were units. But most of these investors, I stay in regular touch with them. They seem to be happy, and no one's really selling. There hasn't been a lot of buying either, so it hasn't been a lot of activity at all. But at this point, we think we're the only kind of early stage publicly traded Bitcoin mining company, looking to uplist, and that is our ultimate goal in the end. So Bitcoin mining in general, there's an event called the halving, and what this means is every 4 years, essentially, there's an event where the block rewards, I described the pools, the Bitcoin mining pools, the block reward is cut in half every 4 years. So why is this good for mining? Initially, you look at it and go, oh, great. So your revenue gets cut in half. Yeah, your revenue gets cut in half. That's not the greatest thing, right out of the chute. But what's occurred each of these times is in past halving events, the price way more than doubles. And so that's because Bitcoin miners are persistent sellers, and they're the most, I would say, I don't know this for a fact, but I guess they're the most persistent sellers because you have to sell Bitcoin every day to pay your electricity bills and to keep the lights on. So now all of a sudden, right now, the block reward's 6.25 Bitcoin. It's going to drop to 3.125 Bitcoin. There's half as many Bitcoin that are going to be sold relative to where they were the day before. Everyone knows this. So there's enthusiasm on the demand side because everyone knows the supply side is getting cut in half in terms of new production. And it tapers off over a very long period of time. That the block rewards are supposed to stop in 2141. So we have another 120 years essentially. So it just diminishes over time. It's deflationary, and it doesn't take a lot to move the needle on the demand side. Who's the team? There's me, JP Morgan alum, Barclays alum, Raymond Mao, ran multi-billion-dollar portfolios. Actually, a good friend of mine, Michael Maloney. He ran a 400 megawatt Bitcoin mining center in upstate New York called CoinMint. He's also currently teaches blockchain at Wharton, and so he's a really super smart guy. Ryan is the COO. He runs the ops. Eric is president. Seth Bayless, corporate secretary, and our general counsel. So with that, would like to open up some questions. And so let me. I'm going to try and do this, and let's try and understand how to do it. Hang on one second here. So let me just go through here. I've got a few different questions. All right. So being asked, how closely is your company's valuation with the price of Bitcoin? Well, I think every CEO would probably say, "Oh, our stock's undervalued," but I really do think we are. We don't have enough eyes on us yet, and I think that's probably hurt us. We just upgraded to the OTCQX, and I'm doing everything I can to get the story out and evangelize, and also execute on our plan. But the more we execute, and the more I tell the story, the more people will see it, and the more the market will appreciate it. And so I am working on that. But these Bitcoin mining stocks in general tend to be high beta representations of Bitcoin. So, they'll move a little more, they'll go up more and they'll go down more, essentially, more if you look over time. What is the rationale for choosing your sites, and what advantages do you enjoy? You always lead with whether the energy price, and in some cases Bitcoin miners are scrutinized for the type of energy they consume. If it's, natural gas or coal or whatever, I don't think that's fair. I mean, there's plenty of data centers that run way bigger amounts of power than Bitcoin miners, and no one asked them where they get their power or what the power mix is. But for us, you really have to start with the energy price, and then that leads into your profit margin, and it leads into the safety. Like post halving, you want to make sure you have a good energy price, because there may be a couple of months where you got to tighten the belt. We're in a profit split, granted, in Kentucky, but it's 2.9 cents there that we're currently sharing with the site owner, and in Trinidad it's 3.5 cents plus land rent, and in Pecos, Texas, it's 5.5 right now. Could be lower if we expanded, but the land rent's pretty minimal there. But that's generally what you'd start with, and also the risk of power prices fluctuating. So we don't try to mitigate that, or we would want to try and mitigate that. Are you currently flat on profit loss? We're getting less loss, because we really launched this business. It took us a while, and so we're cash on cash, a lot less loss than we were. There's some non-cash items. I'm learning about GAAP myself. I'm an investor by trade, And so running this business, gap accounting, everything under the sun, you have to throw in there as a current expense. And so I'm learning how that works. But cash on cash, I think we're in a pretty good spot and improving. What are your growth drivers and milestones for 2024? Just even if we maintain what we have, um, I want to try and stash as much Bitcoin as we can. I think this is going to be a really good cycle. We're getting some broad adoption, mass, you know, I guess societal interest. So I think just being in the game and being able to add more computers. I mean, that Kentucky deal where we added the 5 or 6 Bitcoin a month. I mean that cost me, I don't know, $500,000. Like, it was pretty cheap, relatively to what we're going to get out of it. And if I can find strategic deals like that can double or triple our revenue, I'm all over it. So that's going to be what I'm going to be sourcing out, just looking for those kind of opportunities and being decisive and able to jump on it. Can your servers be used for other applications such as AI? So yes, they can. And so I mentioned we're actually I'd kind of disregarded this as a possibility, but the fish jumped in the boat a little bit. We were approached by an AI company to just talk to him about it. So we're just talking to him about it. Nothing's happened yet, um, but we're looking to try and run some of their GPUs in Immersion. We think those computers will run more efficiently. In fact, we might even work with them on how to expand that. But we're talking to one company about it right now, and so really it's just a data center. So all things being equal, it could run anything. And so, and frankly, as a hosting client, AI customers pay better, so they're less price sensitive per megawatt than Bitcoin miners are. So if we're going to host, they seem to be pretty good source of hosting. What is the time period of that 4.5 million? Yeah, that or 4 to 5 million. What is the time period of that 4 to 5 million of projected revenue? That would be calendar year 2024, if nothing else happens, and that's if a number of factors that have to be involved with any number of things. There's a lot of moving parts. It's kind of hard to nail down a projection, but that's just based on our run rate right now. And that's assuming after the halving, it just goes back to baseline. That's also assuming we sell a small amount of computers. So, I think maybe we might. I have the actual number in front of me, but maybe we might. I don't know, 7 or 8 Bitcoin this month or something, and so maybe it's after we get a couple of more 100 more computers up and running next month. Maybe it's 8 or 9. So you can do the math. It kind of depends on the price of Bitcoin. So you kind of have to capture it at this moment in time, and that's what we're basing it on. But everyone else will be measured the same way. It's not just us. So everyone else has the same issue of the price versus the number of Bitcoin, and so it's the thing about Bitcoin mining is there's a high degree of operating leverage. So your fixed costs are your fixed costs, and we run a pretty tight ship. I don't work for my salary is zero. I own the stock. I am 100% aligned with the interest of the shareholders. I'm not in this to take a salary. I'm in this for the stock to do well. So I'm all in. I sit at this desk you're looking at right here, this picture behind me. 10 hours a day, 6.5 days a week, trying to make this business successful. So that's what we're about. And so the revenue, I hope we can crush that, but I don't know. I'm just basing on what we're doing right now and the low hanging fruit and trying to be conservative. That's where I came up with that. And let's see here. Any other questions that I didn't answer? No, I think that's it. So thanks everyone, and I wanted to just really thank everyone for listening to me ramble on. about our company and Bitcoin mining. If you want to have a one-on-one meeting with me, I'd love to speak with anyone. There's a meetings function where you can sign up for through OTC Markets and Calendly to have a meeting. So if there are no other questions, I will hop off here and thank you all for joining.